Welcome back to Alpha Recap, your daily market roundup from stockalpha.ai. We're outside the session now. Markets were closed for the day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai and even ask follow-ups in the Q&A there.
Great to be here. So, what really stands out here is that today felt like a gentle risk-on tape, with tech and smaller names leading the way.
Right. To put the headline numbers on it, and the market was closed up on these. The broad market finished higher. The big S&P benchmark closed up about 0.25%. The tech-heavy index finished up roughly 0.5%. And small caps were up about 0.5% as well.
Yeah, that tracks. So, modest gains across the board. But the flavor was clearly growth and domestically focused small caps participating.
Exactly. Two big themes really set the tape. One, a fresh burst of AI infrastructure optimism after Poet Technologies announced a partnership to scale optical transceivers for AI networking. And two, crude oil jumped about 4%, which stirred the energy complex and broader market sentiment.
I mean, when you step back and look at this, those two things together created selective rotation. Tech and industrials caught a lift. Real estate and utilities showed pockets of strength, while energy was, well, more volatile than you might expect.
Let's dig into the AI part first. Poet Technologies announced expansion to deliver high-density 2x DR4 optical transceivers. Analysts talked about the capacity number cited as about 1.6 terabits, which is basically a signal that data centers are continuing to upgrade their interconnects for hyperscale AI workloads.
Right. And the market treated that as proof that structural capex for AI isn't just about chips and models. It's also about the plumbing. Optical interconnect capacity has been flagged as a bottleneck, and news like this buoyed a number of small and mid-cap suppliers in the chip and component chain.
Honestly, I was a bit surprised by how direct the follow-through was. Some of those smaller suppliers got meaningful flows, which is why you saw the tech index edge out the broad market today.
Yeah, absolutely. And the narrative was reinforced by broader chatter around memory and chip supply chains. Micron's name came up in sector discussions, not because of a fresh release today, but because banking coverage and chip-led narratives were active.
Switching gears to oil, this was the other headline mover. Crude rallied about 4% on reports that cast doubt on a US-backed diplomatic plan and raised supply concern chatter. That was enough to ripple through energy names and create uneven reactions across exploration, production, and services.
Not a great day if you like calm energy trading. Some producers rallied, others lagged. The discrepancy seemed to come down to hedge positions, balance sheets, and whether managements had already locked in prices.
Right. So higher oil can be inflationary, which matters for Fed calculus, and at the same time, it was a short-run positive for select energy firms. But overall, the sector's price action was mixed. Profit-taking and hedging dynamics were pretty visible.
Quick reactions. Utilities and real estate outperformed a touch today, which is interesting because it suggests yield-sensitive flows were still active. Storage and solar exposure in utilities drew attention, and certain REITs benefited from yield hunting.
Industrials and materials were also on the move. Deal chatter, mining, and equipment flows. Analysts were noting M&A angles in the mining space, which supported names tied to equipment and specialty materials.
And consumer discretionary wasn't left out. Names tied to omni-channel strategies got flows, which helped pockets of retail and discretionary outperform on the day.
So the sector picture was pretty nuanced. Tech and small caps led, industrials and materials had momentum, real estate and utilities found bids, and energy was volatile. Financials traded with sensitivity to both oil and labor market cues that were in the headlines.
Right, and crypto had a day too. The crypto sector strengthened as liquidity improved, and the risk-on tilt helped certain equities tied to digital assets. ETF flows into crypto products were part of that story.
Let's talk about some of the name-specific noise. A string of 8K filings showed up from a variety of small and mid-cap companies. Things like Picard Medical, Bicycle Therapeutics, Victory Capital, and News Corp. And those filings produced idiosyncratic volatility in their corners of the tape.
Exactly. Singular filings can spike moves in smaller names, even when the broader market moved only incrementally. So traders were watching headlines and filings very closely.
A quick checklist on why the market moved today. 1. That oil spike. 2. The AI infrastructure partnership headlines. 3. Corporate 8K activity. And 4. ETF flows and futures positioning into the close.
Right. ETF flows finished higher, and futures were mixed into the close, which suggested some rebalancing and tactical positioning ahead of macro prints and Fed speaker calendars.
On the macro front, there were no rate decisions from the Fed today. But the oil move and ongoing labor market chatter nudged the sentiment around policy. If higher energy prices stuck around, it would complicate the Fed's path, because energy can push inflation expectations higher.
Analysts noted that this day's modest equity gains, coupled with stronger tech and small-cap participation, reflected a risk-on tilt, but not a decisive change in conviction about rates. Markets were still sensitive to CPI, PPI, and payrolls coming up.
On the technical and positioning side, breadth improved selectively. Small caps outperformed, which suggested the advance wasn't limited to just the big mega-cap tech names. Traders were watching support and resistance on the big indexes, short-term moving averages, and the relative strength of growth leadership.
Volatility measures stayed range-bound, despite the commodity moves. That implied investors were willing to accept near-term uncertainty in search of yield and growth exposure.
Quick, short reactions.
Big move in oil. Short-lived? Maybe.
Tech-led, but breadth mattered today.
Yeah, that tracks.
Looking ahead, a few risk items to watch in the next session. Oil and related headlines, incoming macro prints and any Fed commentary, further AI supply chain confirmations, and more corporate filings that can drive small and mid-cap volatility.
Right. And if oil continued to push higher, that would feed into inflation expectations and could change the tone quickly. On the flip side, more AI capex confirmations would likely keep tech leadership intact.
So, what are the takeaways? 1. Markets closed up modestly, with tech and small caps participating, signaling a cautious risk-on tilt. 2. AI infrastructure headlines, the POET announcement, reinforced the structural capex story beyond chips. 3. The oil spike added cross-asset friction, creating uneven reactions in energy and feeding into the policy conversation. And 4. Breadth improvement in small caps is constructive, but sentiment remained balanced, not euphoric.
And remember, analysts note these are market trends and not specific investment advice. Data suggests that headlines and flows were the main drivers today, and any durable shift will depend on persistent signals in macro and corporate prints.
Final quick thought. Traders and watchers should keep an eye on headlines and filings, because those were punching above their weight today, especially in smaller names.
Yep, small cap drama. Keeps things interesting.
If you want to dig deeper, head to stockalpha.ai. And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly in the Q&A, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch us tomorrow for the next Alpha Recap.